Good morning. My name's Don Reddinger. I'm a CPA in Pittsburgh, Pennsylvania. And my firm and I have been involved with the Pennsylvania Educational Improvement and Opportunity Scholarship Tax Credit programs for over 10 years. We have approximately 20 clients that use this program, and we'd like to cover some of the highlights on why this program is so effective. But before we get into the program, I'd like to read our copyright notice and do a few other administrative things first. Any reproduction or unauthorized use of these materials without the express written permission of Reddinger, Gallagher Dickert is prohibited. This information is intended to serve solely as an aid in continuing professional education. Due to the constantly changing nature of the subject of the materials, this information is not appropriate to serve as the sole source for any accounting opinion, return position, and must be supplemented for such purposes with other current authoritative materials. This information has been carefully compiled from sources believed to be reliable, but its accuracy is not guaranteed. In addition, Reddinger, Gallagher Dickert, LLC, and its authors and instructors are not engaged in rendering legal, accounting, or other professional services, will not be held liable for any actions or suits based on these slides or comments made during the presentation. If legal advice or other expert assistance is required, please seek the services of a qualified and competent professional. Okay, now that we have that administrative thing out of the way, I'd like to cover what this credit does as briefly as I can to give you a brief overview. You may have to consult your own accountant attorney for more details. But the basic program is if you make a 2-year commitment for a contribution, you're entitled to a 90% tax credit of the donation you make. If you only make a 1-year commitment, then you're entitled to a state tax credit of 75%. There's also a special pre-kindergarten program where the credit is 100%, but it's limited to $10,000. That credit has run out and has been used by people who have been doing it for years, so the pre-kindergarten program credit is really hard to get, but if you want to apply, you can always try. This slide here just gives you a quick tax calculation on how this program works. And we use $10,000 just because it's simply a round number, easy to follow. If someone makes a 1-year commitment, $10,000 makes a donation, your state tax credit will be $7,500. Therefore, the taxes you owe will be reduced by $7,500. If you donate the $10,000 under a 2-year program and donate $10,000 each year you'll get a credit of $9,000. So you can see the tax savings are significant. And this example here tries to highlight to you how powerful this credit is. The first column is a normal $10,000 contribution. We assume a federal tax rate of 35%. So your net cost for someone to do that is $6,500. And give you the net cost percentage. Year 1 commitment, if you only make a one-time commitment, contribution is $10,000. The state tax credit will be $7,500. And then there's an additional federal tax savings on the extra $2,500 you have to pay above the credit for the actual donation. That'll save you another $875. So on a 1-year commitment, your net out-of-pocket cost would be $1,625. Your cost percentage is 16.25. You can give 4 times as much money over a normal contribution using the 1-year commitment. Year 2, 2-year commitment. Each year, your contribution would be $10,000. Each year, your state tax credit would be $9,000. Your excess savings would be $350. Your net out-of-pocket cost for a $10,000 donation would be only $650. And you can see on the bottom line the tax savings percentage. You can basically give 10 times as much money, the same cost to you. So this tax credit program is really significant. Pitfalls to be avoided in this program. This credit is known as a use it or lose it credit. Therefore, the entity claiming the credit must owe Pennsylvania taxes. This credit is not refundable. It's not carried. You cannot carry it forward. You cannot carry it backwards. So the entity that claims the credit must owe the Pennsylvania tax. If you apply and use a credit more than the tax liability, then it'll just be an ordinary federal tax deduction. The true benefit of the program will not be used on the amount above your Pennsylvania tax line. So in that light, you must project, if you're making a 2-year commitment, you have to project what you think you're going to owe in taxes for the next 2 years to maximize the credit. In other words, you don't want to overestimate the donation credit because if you don't owe Pennsylvania taxes in the future, you'll not be able to use the credit. And in addition, the donor must be able to deduct the charitable contribution. C corporations are generally limited to 10% of their taxable income. Individuals must itemize deductions on their tax return, and they are limited to, charitable contributions are limited to 50% of an individual's taxable income. In this program, I advise all my clients that the dates are extremely important. The DCED application, the Development and Community and Economic Development Department of the state of Pennsylvania, which runs this program, has an application date for new entities of July 1st each year. If you participated in the program in the prior year, you actually can apply early between May 15th and June 30th of every year. And as we go on, you'll see how important the early application date is for future applicants. Once you receive approval that the DCED has approved you to participate in this program, you have 60 days after that award letter to write your check to the charity of your choice. Do not write the check prior to the award letter from DCED. The DCED award letter authorizes you to partake in the program, and you use that date after that to make your contribution. Within 90 days of the approval letter from DCED, you must send the acknowledgement that the charity, the school, the organization sends back to you that they received your donation. You send that back to DCED to finalize the process. DCED will then say, okay, we finalized the process. And they send the information over to the Pennsylvania Department of Revenue, so when you file your tax return, Revenue has the information. If you're a pass-through entity, and we'll cover that later, there's an additional form you have to file in addition to your regular tax return. It's a Form 1123. It's due the same day as your regular business tax returns, including extensions. But that Form 1123 must be filed separately. There's a separate mailing address right on the form that'll tell you where to mail it to. But it is not mailed with your regular Pennsylvania return. It is mailed separately. Okay, this is just kind of a walkthrough on how you notify the state that I want to partake in the program. You go on to the DCED electronic website, single application, before you make the donation. That's where you apply. Applications are processed on a first-come, first-served basis, day by day. To give you an example why this July 1st date is so important, last year the PA EITC money ran out the first day applications were received. Why? Because the state has a maximum amount that they allot for this program. I'm not sure exactly what the limit is today. I think it's 120 million, 100 million. So once the state has awarded $100 million of these credits, there is no more money available, and your application, if it's received after that date, will be denied. You'll have to wait till next year. And that gets back to why, if you participated in the program the prior year, you get to apply early, May 15th. So the past participants are almost guaranteed, not totally, but almost guaranteed, that they'll be able to partake year after year. So the process for obtaining the credits, you determine your tax liability. You apply for the tax credit on the DCED webpage. It's a single application, very easy to fill out, but do not make a contribution until you receive approval from DCED. If you're a pass-through entity, right on the form, the single application, you will answer the form that you want to use this as a pass-through entity. New this year on the DCED, since the EITC money runs out so quickly, there's a question you may want to answer. If I'm denied EITC, which is used for all students, do you want to automatically apply for OSTC if you're denied the EITC. If you check that yes, the state will automatically take your application from EITC, which was denied due to the state limits, and allow you to process an OSTC tax credit. TCE then sends you a letter notifying you of their approval. And as I said before, you have 60 days to make the contribution, and then 90 days to send the acknowledgement of that contribution, which the charity sends back to you. You then send it to DCED. Pass-through entities, once again, the Form 1123 must be filed. And it's filed separately from your corporate or personal tax return. When can I apply for the credits? You get on the website. First year application is July 1st. If you're early, the second year, May 15th, which is why that participation and early filing date is so important. The second, third, fourth years you participate in the program, you get to apply early, so hopefully the state limit will not be exceeded. There's also a maximum credit per year on the entity, $50 million in the OSTC program. There's a maximum at the state level, and once that level is exceeded, the state will deny the application. It's anticipated this maximum will be exceeded for the first day for PA EITC if there's not increased funding. There's a bill in the House and the Senate currently that may increase it, but that is uncertain. We're very hopeful that it'll be increased, but it probably will not know that until the budget's passed by the governor at the end of June. Hopefully it'll be the end of June. It could be longer. The OSTC program is also becoming more popular. The OSTC program provides scholarships specifically and only to students who live in a 15% bottom performing public school. DCED puts out the list of schools that qualify. Most of them are urban, not all of them, but most of them are urban schools. And the OSTC credit has to be given to those students coming out of those bottom 15% performing schools. That money ran out last year in February, so it's anticipated there's going to be some OSTC credit available this year, which is why when you go on the single application, there's a question. If the EITC is denied, you want to check the box. It'll automatically flip you over to an OSTC credit, and then you'll be processed at that date for the OSTC credit. There's a maximum credit of $750,000 per donor, or the credit $750,000, which is a maximum donation of $833,000 at 90% per business entity. Who can use the credit? Business entities who are subject to PA taxes. A single member LLC is a qualified business entity, but a sole proprietor is not. So you have to be an LLC or a corporation, or if you were owners of a pass-through entity, include owners of general partnerships, limited liability partnerships, subchapter S. And then there's a new special purpose entity, which we'll talk about later, which is brand new in the law this year. The contribution must be made by the business entity or the special purpose entity. The individual cannot write the check to the charity, but the business must write the check. Sometimes the owner may have to infuse the funds into the business entity. It's a capital contribution, but it should be noted that the business entity has to write the check. Current year PA taxes can be offset with this credit. If the business entity is a pass-through entity, then the credit that is not used by the business can pass through to the individual owners, which allow the owners to use the credit to offset their Pennsylvania personal income tax. Another new feature beginning in 2014 is the owners may use the credit against their entire joint Pennsylvania tax liability. It's not limited to the business income just from the pass-through entity. So the owners can use it to offset wages, interest, dividends, capital gains, rental income, whatever their Pennsylvania liability is. So they can offset that tax. Flow-through entities include the following: subchapter S corporations, general partnerships, limited liability partnerships, limited liability companies, taxed as partnerships or taxed as a single-member LLC. So single-member LLCs do qualify for this program. Business trusts, which operate a business and are taxed as partnerships, and new special purpose entities, which are brand new in the law. What taxes can be offset? Corporate taxes, corporate net income, capital stock tax, bank and trust tax, title insurance company shares tax, insurance premiums tax, mutual thrift institution tax, or for the first time ever, malt beverage taxes is a new tax that was just been added to this list. If you're a pass-through entity, the personal income taxes, the personal joint income taxes of the owners of the pass-through entities. Under the note here, we're saying that for the first time, joint PA tax liability now includes your spouse. I'll give you an example. In prior years, I participated in this program through my business. Prior to 2014, my wife and I had to file separate Pennsylvania returns, and the credit that I got out of my business could only be used against my income. Starting in 2014, this is no longer the case. My wife and I can now file a joint return, and the credit spun off by my business can now be used to offset not only my income, but her Pennsylvania income. So that can be a significant new way to increase the amount of the credit you can take. The new legislation passed last November, I believe, added a new entity that's very unique, and it's you'll be hearing more about this type of entity in the future. It created what they call the special purpose entity. And this special purpose entity is created for one reason only: to participate in this tax credit program. And the real question is, who can be involved with this special purpose entity? The definition says it can be shareholders, partners, members, partners, or employees of one or more other business firms. What does that mean? That means if you have a W-2 employee, you no longer have to be an owner of the business. But if your employer is subject to Pennsylvania taxes and pays just subject to Pennsylvania taxes, that would qualify you as an employee of another business firm. So the employees of other business firms are a whole new, brand new donor base that's available for this tax credit. We believe that an employee of a nonprofit or a governmental organization would not qualify to participate in the special purpose entity since their employer is not subject to PA taxes. And as with the other rules, sole proprietors would not qualify. Those are the people we don't think that will qualify. Now, the member of this new, and we assume it's going to be a member, just legally, we think the LLC method of establishing an entity would probably be the most flexible, that most special purpose entities will be LLCs. That the member must also be a qualified investor under federal and Pennsylvania Security and Exchange Commission rules. So this will limit it to higher income people, but it does provide a mechanism and a vehicle for employees that could not participate in prior years, or partners who did not participate in prior years, to join one of these special purpose entities. And I think you'll see the focus of many of the organizations that partake in this tax credit program to create special purpose entities. The other big thing that really helps is the distribution of the tax benefit will be determined at the special purpose entity level and not based on the other business firm that was used to qualify the participation. The qualified special purpose entity may be established to apply for the credit, and the entity will then pass the credit through to its members. The members will contribute or may contribute capital for the sole purpose of providing scholarships under this program. The special purpose entity eliminates some of the reasons large organizations such as law firms, accounting firms, architectural firms did not participate as a corporate or partnership entity for the following reasons. One is the very large law firms have a lot of out-of-state partners, and the partners in New York and California really don't care about Pennsylvania taxes. All the items the credit had to be prorated based on the ownership of the large organization. So it had to consider all 2,000 partners throughout the country, many of them outside Pennsylvania. And then the third large hurdle of many of the large organizations was who was to get the money, because you had a diverse contingency of partners. All the partners would fight over which charity was going to get the organization. So rather than go through all this, the large law firms did not do it. So this is encouraging large firms to form special purpose entities. Okay, this final page here is just a list of the DCED website that lists the program in general, that lists the schools that are and organizations that are eligible in general. And the other thing we give advice to all our clients is a lot of schools are not listed under the school's name itself. But a lot of the organizations have umbrella organizations that may cover the entire state, or may cover a few counties, or may cover a few jurisdictions. So we encourage our clients to call the school that they want to give money to see if they're eligible. If they are directly eligible, they'll be on this list. But a large number of the umbrella organizations will cover 30, 40 schools, and it's very difficult from this list to tell who the umbrella school organization covers. So if you have a particular school you want to give money to, our recommendation to our clients is to call the school or the organization itself to see if they participate in the EITC, OSTC program, and who you would write the check to. Sometimes it's directly to the school if they register with DCED themselves. Sometimes it's through an umbrella organization who then would funnel the money back to the school if you designate your contribution that way. I want to thank everyone for listening to this program. Hopefully it will help you understand the program, help you understand how powerful this is in tax savings and how you could funnel a large donation to the school or organization of your choice at a very nominal cost. I appreciate your attendance. Don Reddinger. Thank you.